The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, everyone. To the Commodity Hour. We're going to have Rich Anderson from Anderson Capital Management on at the half hour. And I'd like to start off with the program, discussing a little bit about Arch's comments about the severity of what's happening in the world. Remember, folks, it's an opinion and a prediction. It's not a certainty. And although he is right some of the time, he is just like the rest of us. He's also wrong some of the time. So that's all I can say. He was pretty adamant about the astrological aspects that come in on this full moon of the 29th, which will be Monday. The good part is that we'll be on the show Monday, and we will be able to see if there's anything happening at that time. But it is a long weekend, not a long weekend, but it's a weekend, so there'll probably be some little extra volatility just because of that. Okay, we started the show. I posted the chart of, because this is the Commodity Hour, I put the most, actually the largest crop that we have for the U.S. is the corn crop. It's quite large. It's, I think, 11 billion bushels or something, so it makes it quite expensive as far as where the price is right now. But if you'll take a look at that chart, you'll see that we made the 1.618 expansion, coming off the bottom where the drought started in June. And now we've started to correct from there. And remember, when this market started to correct, it was doing it in the face of this three-drive pattern that was happening up at the top near the 1.618, and also the fact that the news was so wildly bullish. You saw pictures of the corn crop. I mean, Dr. Miller sent me a picture of her corn where she was standing in the field, and frankly, she's very short, and she was taller than the corn, and usually it's 8-9 feet high, so it was quite bad. The thing to remind yourself is that the news follows the trend, so all this stuff usually happens along with the news. The same thing, I believe, the same chart that we're looking at in corn is the same chart that we saw in apple. They're almost identical, except apple has gone up a great more than corn, of course, but it's made that three-drive pattern at the butterfly expansion. So, that's something that we will follow here, even though I don't trade apple very often, and when I do, I'm usually wrong, because I've been right a few times. It's pretty good things, but it's not one of my better trading vehicles because I'm on the bearish side some of the time, and it makes it a little difficult. But we did buy it down there at that 532 level when it made the big ABCD. Okay, on to the next thing. All right, the next chart that I posted into Tiger TV was the gold chart that we talked about when I was on the air yesterday. The importance of that low that was being made down at that 1740 level, because that was the ABCD correction. And as I pointed out, Gartley said in his book, the best thing to do is to buy the very first ABCD. In fact, he said buy all of the ABCD corrections in bull markets and sell all ABCD corrections in bear markets. And that is, in fact, what we're having now is the fact that we had a really nice ABCD. It was nearly perfect, and now we've rallied back and we've touched the 786 retracement of that low. So it's rallied over $35 an ounce since the low was made. So these are how you try to use these patterns on a shorter term basis. If you miss an entry, just go to an hourly chart or half-hourly chart, and you'll be able to see some of the entries that we have that look pretty good. Now, the next one that we're going to take a look at is the silver market, because I still believe that gold and silver are at very critical levels. We're having another test in the gold market today. We're also having a test in the silver market today. But these longer-term numbers that we hit last week, 17.92 per ounce in gold and 35.35 per ounce in silver, are still very, very important. and we have not taken those out. Once we get above those levels, which is 1,790 in the gold and 35.35 in the silver, then this would be a really valid breakout, and we would expect another, really strong move, usually $4 or $5 an ounce in silver, and probably another $100 or $150 in gold, and we would make an assault on that 1932 per ounce level. But we've got to get above and close above 1792 an ounce in gold before any of this comes to pass. Otherwise, all we're looking at here is a place to, liquidate your position, or at least lighten up a little bit. And because we've been bullish this, since late July, because we had those 4 higher bottoms in silver, we had 5 higher bottoms in the gold, and it was a spot to really get long. And of course, Newmont Mining has done incredibly well. Also has the XAU index. So these are the things that we're watching in the gold and silver, very critical levels, that we saw last week, and so we'll see if these will continue to go on. Now I'm going to change the focus here a little bit this morning and jump around a little bit, because I've had some questions from people about one of the trades that we were looking at before I went away on my vacation. And what I wanted to do was to bring out the chart for the natural gas, the daily futures that we were watching at the time. Now I left right around the end of August. I left on the 24th of August, and that's when we were completing this ABCD Gartley pattern down at the $2.66 per cubic feet level, and now we have we've gone up and we've taken out the July high. The gap that you see on this chart, folks, is because of the contract changeover. In other words, they're changing from September to either October or December in this, and that's why you'll see the gap. This will be corrected eventually, but that's why you're seeing it, is the fact that it corrected probably this week, and that's why you're seeing this. But this is the pattern that we're looking at. The reason why I want you to take a look at this is if you'll see these 2 gold colored ellipses that I put in there, and that's basically, these are patterns that have repeated themselves. The first time was the one that happened in June, of course, and the next one is the one that occurred, into August, and they were almost exactly equal. This is exactly what happened when we were looking at the U.S. dollar, and the U.S. dollar is so important to all of our trading because, as well as I do, that it has, so many things that make it. Oh dear, I'm trying to get this up. Try to talk and chew gum at the same time for an Italian is absolutely impossible. But I'm going to bring up the chart for the dollar index again, and you'll see these same types of patterns where the market repeats over and over again. And that's what you're doing when you're doing pattern recognition, is watching this repetition, because believe me, folks, the market repeats over and over and over again. It never does anything any differently. It might for a very short period of time when you have parabolic moves, but most of the time it's doing the exact same things. The whole rhythm starts with AB equals CD. That's that little tuning fork thing that the markets go back and forth, back and forth, back and forth. If you look at a tick chart, you'll see that's all you're seeing is AB equals CD. It looks like a cardiogram of an athlete. I mean, it's just a perfect harmony, that is there. So this is why you want to watch this repetition, that you're looking for. Oh, by the way, Tom is giving in fact, I listened to the show a little bit earlier, and I heard that Tom is giving a seminar in Tampa, half-a-day seminar, and it's free, and believe me, it's going to be amazing, the stuff that's going to be there, because I think this is, if you're anywhere near the Tampa area and you get a chance to see that, they told me it was free, and why it's free I don't know. I wouldn't do it for free, but Tom is a philanthropist, and I'm not. So anyway, this seminar would really be good if you get a chance to go to it. If I were in Florida, I would certainly go to it myself, because it is certainly within my budget and priced right, priced the right way. So this is what we're going to be looking at. Okay, then we're finished with the natural gas. Now, what we'll do now is we will move to another one of the metals, and that is copper. And we saw the copper form the large ABCD pattern and the Gartley pattern that it formed way back at the $3.85 per pound level. And since that time, we've been down 6 or 7 days, but we did not correct very much. You know, oh, by the way, there's also going to be over $2,000 in prizes, and I think that in itself is another incentive to do that. Education is always good, and that's the best part of what you get here at TFNN. They have a lot of wonderful things. Some of them cost a little money, some of them are free, but all of them are trying to to make you better, and I think it's important. By the way, never mind. That's a personal thing. Well, I should say something since I opened my mouth. I've changed all of my health habits. I'm starting to sleep a little more. I haven't had a Diet Coke in over a month. I haven't had a glass of wine in over a month, and I don't drink much wine. I only drink not more than 4 or 5 bottles a day. About 2 glasses a week is about all I drink in wine, so I haven't even had any of that. So it's helped my health. It's helped my energy level. And, I know that Tom's been screaming at me for 5 years to do this, and so I finally did it. And it was basically an ultimatum from the doctor, because if he said I didn't do it, he said I wouldn't be on the show much longer. I don't know what he meant by that, but I'm feeling pretty good, and so that's okay. All right, so we're looking at copper. It made the 786 retracements. It's backed off about a week and a half. It hasn't gone down very much. And so this is an important level at that 385 an ounce in the copper market. So both gold, silver, and copper all topped right at the same time, right at the same numbers. And, that's the main thing. I want to make one other comment about the alcohol. I don't care whether it's wine or whatever it is. You really shouldn't drink any alcohol 12 hours before you trade. And the reason for that is it takes that long for the most of the alcohol to get out of your brain, and it does destroy brain cells. I don't think there's any question of that. And so if you do any trading, make sure you don't do that. When I traded at the floor of the Mercantile Exchange, when you went into the members' lounge, I mean, these guys had little flasks in their jackets where they were taking hits of rum and scotch. This was back in the 80s, and of course later on they went to the hard stuff, the powdery white stuff. So a lot of that happens on those exchange floors because the stress is very high, and they keep score with money. And anytime you do that, you're going to bring in a whole lot of stress that none of us really need. That's an absolute certainty. I don't think there's any question about that. So just remember, to watch that. When I worked at Commodity Corporation during 84, 85. We got to take a little break here. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, this is the Futures Hour with Larry Pesavento, and I'm going to change directions here for just a second. We have been talking about the grain markets. We started with the corn chart showing the fact that when we got up to this 850 per bushel level, that it was, making a 1.618 expansion on the weekly. Hit that point exactly to the penny, folks. It didn't see 851 a bushel. It only went to 850. And that was the number. Now, I mentioned that this pattern that we had in the corn market was very similar to that pattern that we're having in the apple market. And I'm not talking about the Macintosh and the Galas. I'm talking about the iPhone. And this same pattern that we're looking at is occurring. And we've had our first, nice correction. The stock's dropped over $40 a share. And now we're snapping back and making a good snapback rally. So let's try to learn something from this as we're on the show, and just follow this over the next few days to see if what we're looking at is going to happen. And what I'm going to do is I'm posted into the room the chart for Apple. It's the daily chart. It shows the butterfly pattern that completed up there at the $7 per level, $700 per barrel level, and then per barrel. Wow. Well, sometimes apples come in barrel. At least they do in the Midwest. At $700 per share level, and then we've broken down $40 a share. Now we're rallying back. Now what I would expect to do, I would expect to see a rally. Hopefully it would take 3 or 4 days to, hopefully is not a good trading word, believe me. You want to expect it, but don't hope for it. Somewhere between 687 and 695 is where I would expect Apple to rally back to. That's another $10 to $20 from where it is right now. Now at that point, that's where I would be looking to either short the stock itself, and at this level with this type of liquidity and everything, I don't think you'd have any problem selling it there. You'd probably have to risk about $20 a share, but the price objective would take you way down into the $600 level, around 600 even to 580. That's what I would be looking at. So I'm going to put this on the calendar that we're going to watch this as it unfolds. We'll watch it, of course, on the Monday and Wednesday stock shows. But it doesn't make any difference whether it's Apple Computer or whether it's the corn crop. All of these patterns are doing exactly the same thing. So this is what I would try to do, is to show you how these patterns all look the same. It doesn't make any difference, what you're trading. They all do the same thing because you're measuring fear and greed, and we keep score of fear and greed, with money. And greed is a great emotion, but fear is by far the greatest emotion because it has physiological characteristics, sweating, dryness of mouth, expanding eyeballs, white knuckles, all of these things, stuttering, like I'm doing now. But this is what you want to watch, because when you have fear, prices go down much faster. That's why pros like to sell short, because they get rewarded when they're right much faster, and usually in a greater amount, because people start dumping stuff. But you have to admit, folks, the news on Apple is about as good as it'll ever get. It gets free news coverage like nothing we've ever seen in a product. Except maybe the hula hoops many, many years ago. So this is what we want to focus on as far as the pattern happening, and we're going to do it on every show, not just the commodity show. I want to see if this pattern works the way I think it's going to work, and then we will see. And then if it doesn't work, it's just one of those that doesn't work. You just move on to the next one. That's all you can do. But it is a pattern, and it doesn't make any difference whether it's Apple Computer or corn. They do look alike. And many of these patterns do repeat, over and over again. Now, the next one we're going to take a look at before we take the break here, we were focusing on this yesterday as it was happening. I was talking about the importance of this $90 per barrel level in the crude oil. I believe that the exact price was $89.60. It went down to $89.10. And it has since rallied $3, almost $3 a barrel, based on that 786 retracement. So as long as that oil can, stay above, $90 a barrel on a closing basis, it's got a chance for, another move on the upside. So that's what we're going to look at. Now, the numbers that I'm looking at on Apple are from 687 to 695. The 687 is a 61% retracement of the $40 break. And 695. It's very simple. It dropped $40, and if you multiply 40 times 0.618, you're going to come out with 27. You add 27 to the bottom, and that's going to get you up to that next level of the 618. So that's what we're watching. So crude oil did hold that bottom very, very nicely. And we're going to take a break. When we come back, we're going to have Rich Anderson from Anderson Capital Management on. Be sure to call in with your questions.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, good afternoon, everybody. We're going to have our guest, Rich Anderson from Anderson Capital Management, is going to be joining us. Are you here, Rich?
Yes. Hi, Larry.
How are you?
Doing good. Doing good.
I was telling our listeners on Monday the story about our good friend Ricky the Rocket, and Ricky's going to come on sometime in January in order to explain to the folks why it's probably best to always take care of yourself and work for yourself.
Yeah.
After 40 years at Smith Barney, they certainly didn't give him much time to let him go. So let's talk about some of these markets. What do you want to start with? The corn?
Well, all the grains, the wheat, corn, and beans have been under pressure. There's a couple of things going on here that it's important for everybody to really appreciate, and that's that markets are a lot about money flow, okay? And it's the end of the quarter and the end of the year for a lot of these hedge funds. So they've been getting out of some positions. I mean, the other day, cattle sold off sharply, and the open interest was down 10,000 contracts. There's a couple of inflation hedge funds that have been cutting positions, major amounts of volume. Now, they won't come back into the markets till the beginning of their new year, which is October 1st.
Okay.
There's also a crop report tomorrow. Now,
they've changed the dates of the crop reports now, haven't they?
Yeah. So this is just a supply and demand one, and then there's October 11th. There's another crop report, and between those two crop reports, you'll typically see the market put in a low. September's historically a weak month for the grains. You've got the
harvesting
PRC.
pressure, yeah.
China's stimulating their economy. That's why you see gold and silver up today. And I expect come October, all of a sudden they turn the calendar, and the money flow, instead of flowing out, will be flowing in.
Yeah. What price levels are you looking at for December corn, Rich, as far as good support?
Well,
somewhere around that 660 level.
Pick a price, I'd probably pick either here or down around 690. There's a gap that I like the idea of visiting gaps.
Yeah, and also returning.
We're at 720, and we're 714 and 3/4 right now. We're about 38% back. The CRB index, which typically will bottom around the first part of October, is down slightly below its 50-day moving average, and you'll see that turn. The China stimulus, obviously I'm doing something here, I don't know what, but something. The China stimulus is going to help that all along.
Okay. Would you explain to the folks about the money flow that you talked about how these hedge funds operate? Because many of the folks, don't understand, the severity of how these markets can move with the hedge funds. So just give them an idea of how hedge funds operate, because I know you deal with a lot of commodity hedge funds and a lot of the old, the market wizards. But could you give them an idea what that means?
Sure. Well, large hedge funds, the Goldman Sachs index and the Deutsche Bank, those are static. That doesn't change that much. But all these hedge funds, which is the new money that's come into our markets, they'll come in and say we're going to allocate $5 billion and we're going to go into 10 different markets or 20 different markets. So they go in and buy in all those markets believing there's going to be inflation. Well, that extra money, those extra contracts being bought, is a huge lift to the markets, and they'll typically do it over 3 to 5 days. When they get out, they do it the same way. And so last week you saw cattle drop sharply. Well, 10,000 contracts went off. Open interest declined. That's 10,000 contracts of money that was flowing out of that market and flowing out of corn and beans and crude oil, gold, silver, but and then the way hedge funds work, because they're looking for standard deviation. They don't want their returns to deviate too much. If they drop more than X% for the month, they just go flat, and they don't do any new positions till the next month. That's how they keep their monthly standard deviation at a very attractive rate, so that they can be comparable to stocks.
And the other reason they do that
they'll come back. That money flow will start showing back up in our futures markets next month, which is Monday.
And one of the reasons why they also get out is they get billed at the end of the month, at the end of the quarter. That's when they get paid, right? Yeah.
Right. There's some of that, and there's some redemptions. But a lot of the hedge funds haven't done all that well this year.
Well, that's for sure. They've been under a great deal of pressure. Rich, the last time you were on, we were talking about the cattle market, and you were spot on at that time. The April cattle had been going straight up, and you said that they would top right around the time the corn did, and almost to the day. We've had a tremendous move down, in the cattle market. Now, you're still bullish long term on the cattle? Is that correct?
Well, there's no question. I'm very friendly long term. But for the next through the end of the year, they'll just probably bounce back and forth, something between 120 and 130 on the front month. But as we go into the end of the first quarter, beginning of the second quarter next year, there's going to be a real shortage. And if the economy is just average, the prices will go up measurably, materially.
Yeah. I remember when I first met you, Rich, about 35 years ago when you were just a young broker. I believe it was Payne Weber, wasn't it?
Yep.
Yeah, and we had a squawk box, and that's when I was at a different office as a trader, and I would get on and talk about Fibonacci numbers. And Rich, you were about 20, weren't you?
Yep.
Yeah, something like that, yeah. And we started talking about that, and that's how we became friends, and then we made a lot of mutual friends through the years. By the way, Rich, today's Mark's birthday. Mark Douglas's birthday's today.
I'll give him a call and wish him a happy birthday.
And,
Thanks for mentioning that. You mentioned some of the market wizards. It's interesting to note that I started at a small company called Hornblower that was bought.
Hornblower and Weeks. I remember them, sure.
And there's a guy by the name of Jack Schwager that's wrote a few books on market wizards.
He was a broker there too. Yeah, I remember that. I remember Jack asked me to be in the first book, and I said, "Nah." I said, "I'm not a wizard." I said, I've lost too much money. Just because I make it back doesn't make me a wizard. If I hadn't lost it all the way, up and down, I said maybe so, but I said I just lost it too much. So, but luckily I've stayed alive through the years and done relatively well. So it's been a fun career, and we've certainly met a lot of interesting people along the way, to say the least. And,
there's a lot of great people around the country. Yeah. There's a lot of great people. Yeah.
Do you still talk to Jeff Silverman?
Mm-hmm.
Yeah, he's one of the market wizards, and I think I don't know if he still trades through you or not, but you talk to him quite a bit, I guess, right?
Right. He's huge.
I know he puts positions on in cattle and hogs. They put limit positions, as I recall.
In 2 or 3 months.
Yeah. Oh my gosh, I know he's such a nice fellow. I met him back in '85 in California, and it was his famous comment was, he said, "Boys, I can really pick these markets, but I do really bad at picking wives." He said, I can walk into a room with 1,000 women, and he said I can pick the 2 psychos without any trouble at all.
Well,
I always remember
the very first book I read, and I don't remember the name of it. Like in the first couple pages said, in order to make a lot of money in the futures markets, you have to have little interest in money. I don't spend money. I like to make it, but I don't spend it. But he said, it goes on to say, but don't worry about when you make a bunch, then you'll find some younger woman that'll spend it for you.
Oh dear. Well, you've been married to the same woman for a long time with 2 lovely kids.
36 years.
Yeah. Has it been that long? Oh God, I can remember being there. Boy, that's amazing. And,
it's a long time.
Of course, seeing your one daughter is an attorney, and she's quite successful, isn't she?
Very
Tara?
Successful.
Yeah, that's good. Well, listen, thanks for being on the show, and we're going to have you on.
The key point is the calendar's going to turn. The hedge funds will start to come back into these markets. China stimulus, and I'm not just talking about the grains. I'm talking about all markets generically. The CRB index will start to perk up, and I think by Thanksgiving it'll be a whole different picture. A very large exporting firm in town believes corn can go back to $8.50, no problem.
Wow. Well, if it holds
and
that
you know
level,
what I'm talking about.
Oh, sure. Well, you can say it. I mean, there's
no.
Oh, you can't say it? Okay. Is this 007 type stuff?
Yep.
You'd have to kill us?
Yep.
Okay, let's keep it quiet then, okay?
All right.
Okay, thanks a lot, Rich.
Take care.
Bye-bye. Okay, bye-bye. Let me know when he's off the air, and I'll tell you which firm it was. No, it doesn't make any difference, but Rich is in Minneapolis, so you can figure it out yourself. And just because they know something doesn't mean it's going to happen either, because that's the name of this game without any trouble at all. Okay, now I posted into the room the chart for the live cattle. And you'll see that it made a big Gartley pattern up at around the 127, and it's dropped about $6 a pound since that point. That's equivalent to about $2,500. Now, what we want to do next is we want to take a look at the April cattle, which are the cattle that are going to really be affected by this over the next several months, because you have a situation where the April cattle had started going up long before the cattle of August and October. We're trading October cattle now. So you'll see when you go into the Tiger TV, you'll see the April 2013 cattle, and they've actually dropped about $5 a pound also from that. They made like a double top and stayed there. They topped around the same time that the corn did. And because basically you take corn and you feed 50 bushels and you get a pound of beef. And, I know it's a bad waste of energy, but that's the only way you get to make beef is to feed them either soybean meal or corn. So we are a beef-eating nation, and we have to pay the price for that. And so we're looking at somewhere another 3 or 4 cents lower in the cattle. We'll be looking at that, and I'm going to try to look at some of these ETFs like COW, which is the ETF for cattle, and CORN, which is the ETF for corn, and maybe we can look at some of these. We did this in corn when corn was back very, very low back in June. We watched that quite a bit, very, very closely. In fact, one of the den members, Zitao, was pointing this out to us when we were in late May. He was pointing out the corn ETF was doing the same thing, that we're looking at. Well, since we've been on the air, we've had a pretty good rally in the gold market. We broke above the that high that we were looking at just a second ago. I'm going to try to bring that back up. And because if we get above $1,790 an ounce in the gold market, folks, we've got a real chance for something really, really dramatic to happen, and that's the main thing that we're looking at, because this 618 retracement that we've had on the gold chart at that 1790, the market only backed off for 3 or 4 days, and it didn't back off very much at all. And so if we can clear above, $1,800 an ounce, there's so much. I put the weekly chart in for gold, and if you'll take a look at it, it hit the 618 and the 50% retracements of last year's lows, and it hit it 3 times. Then it hit it again, and then it hit it again. So 5 times over the period between September and May, it hit the 61% retracement. It didn't go below it by more than a couple of dollars. And that was at the $1,522 per ounce level. So this base that's formed here, as the market starts up, and it certainly started up the way we expected with these higher bottoms, if we can start moving higher, and we are moving higher, we can go a long way, and we can take out that 1732 per ounce like it didn't even exist. It might make a double top for a little bit. I shouldn't make really dramatic comments like this, but this market for the last 10 or 15 weeks has not had much of a correction. They've all been higher bottoms, and they've been easy to buy. The one we looked at yesterday was an ABCD down at that 1740, and now you're $40 higher. That's equivalent to 80 S&P points. In other words, that's $4,000. That's equivalent to 80 S&P points. So, gold is much more volatile, much more fun to trade, as is crude oil. Crude oil's moved $2,000 in a matter of a few hours, and that also, was down at major support that we're looking at. So these are why these numbers are, at least in my opinion, and of course my opinion only counts with me, so this is why we have to look at these very, very closely. I'm going to scale down just a little bit and go to the hourly chart that we were looking at in the gold, because you'll be able to see that the move that we had off of that ABCD pattern yesterday has reached the 786 retracement up here, and if we can clear, I sound like a broken record, and maybe I am, but if we can get above that 1792 level and close above there, that's going to be the first sign that we got a real shot at taking off. And the reason why that's important, folks, is it took 5 days for the gold to make the ABCD correction down at the 1742 level. Okay? Now, I know if you're looking for an entry point, these are what I think are easy, because they're simple geometry. We're coming into the train station here pretty soon. Okay, we got to take a break. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. And I posted into the Tiger TV room the chart for November soybeans. It's the weekly chart. And if you'll take a look at that, you'll see the double top that formed up there during the middle of the drought. And we've had a pretty good $10,000 correction now in the beans. And as Rich talked about, we're probably, because we're in the harvesting season now. That's why they call it a harvest moon. This moon that we have coming up on the full moon we have coming up on the 29th is going to be very, very bright, followed by the brightest full moon of the season, which will be the October harvest moon, which will be sometime around the Halloween level. But that's why it'll be so bright, and that's why they called it a harvest moon, because the farmers would work day and night to get their crops in, and they were able to work at the light of the moon. This is one of the reasons why Navy SEALs, whenever they have a op, they always go in at the near the new moon, because it's dark, and most of these people that are in the Army, like Patton and Schwarzkopf and Eisenhower, they all read The Art of War by Sun Tzu, and that was one of his battle tactics, is use the darkness of the moon as your thing. Now, we did talk about we haven't talked about the dollar. We did talk a little bit about the dollar index, but I posted a chart in the room just a little while ago, Tiger TV room, about the euro. Just looking at it on a half-hour basis, and you'll see that it's completed some really nice patterns. It made a very nice, Gartley pattern down at that 128.25 level, which was the low. And I guess the Spanish government came out and said they didn't need any money or whatever it was, and we've had a pretty good rally from there. But the longer-term chart on the euro is very bearish as long as it doesn't get above that 131.50 level. That's the same level. If you reverse it and look at the dollar index, that would be the dollar index at 77, and the dollar index right now is at 79 and change. So that that is really good. Now the euro is really nice if you like to day trade, folks, because it's the biggest, most volatile, largest market in the world by far, thousands of times bigger than the S&P 500, believe me, and many, many, many times bigger than gold, but far, 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 far bigger than the S&P 500. It gives you greater leverage. It gives you greater liquidity. In other words, there's not a lot of stop slipping and stuff. Occasionally there will be, but not much. And it's just a wonderful thing to trade, and it trades off these patterns that we look at, the little ABCDs and Gartleys and butterflies, just very, very nicely. So, Forex is by far the best to trade. We weren't able to trade Forex up until 10, 12 years ago. It was only limited to people that had multi-million-dollar accounts and had access to Deutsche Bank and Citibank, and were preferred customers of them, and they were able to to do that, and I believe that was back in the 1972, 1973 era, when that stuff was really starting to become more and more popular, because it was the Deutschmark. The people were loving to buy Mercedes and Volkswagens, and because they assumed that the price, the retail price, would not go down very much when you traded it in. Well, the reason why is the price of the Deutschmark was going up, and so the value of the car was going up. It had nothing to do with the value of the car. It had to do with the value of the Deutschmark. And Ed Sakota, who was one of the market wizards, made his whole living and his whole career was based on buying, the Deutschmark and the Japanese yen and a couple others. And, he became a market wizard just from trading Forex. And he's a very smart man and a wonderful mathematician, but that's basically how it works. Well, we've got to head for the clock on the wall says it's time to head for the door. May God bless, and everybody have a wonderful day.